Hello and welcome to the market update for Tuesday, August the 3rd. We have the market rebound today. Yesterday it looked like a pretty bad bearish reversal. It looked like we were going to go lower today based on that reversal. But one thing I've been talking about a lot lately is market breadth. There hasn't been a lot of participation, and that can be in both directions. On some of the bearish days when it looks like things are going to drop, it's just a few stocks that are causing that selling, and so you can get these reversals back and forth all day long when that market breadth is so low. Now I think it's starting to pick up a little bit today in particular. We'll look at the indexes here in just a second, but it's looking like we're in more of a corrective phase as we've been kind of whipsawing back and forth. And based on the context of that whipsawing, we should start to move higher. Although again, that confidence in moving higher is only going to be if I start seeing stronger breadth in the move, meaning more stocks participating in the directional move. Now, as far as the directional alerts, I'm not going to focus too much on the directional alerts today, just because there's a little glitch that we're working on right now. We've got the momentum indicator that looks fine right here with it kind of moving up into the buy area right here. But if you've been on the software today, you probably noticed a couple of really weird extremes. You've got breadth at zero extreme over here, and you've got sentiment at the complete extreme over here. Obviously, that's not accurate. So just a little glitch in the data system that's being fixed right now. And anytime you're dealing with data systems, especially with the market, you can get sometimes you get these little glitches that can take place. And so that's why whenever you see something that looks completely unusual, it's probably something that's in the data that it's being fixed. It's usually close to being fixed, and it'll get back to normal there. But if we move over into the buy-sell ratios, one thing I want to focus on down here is we're getting close to getting to that. We want to be at least at 1, where the conditions are more ideal for buying. And we're at 0.91 right now, but it's rising, which means that with today being an up day so far, as long as it kind of holds, we'll probably get over that. Remember, this update's overnight, so we'll probably see that buy-sell ratio get up to close to 1 or over 1 by tomorrow, which means that any of the patterns we see tonight or today in some of the specific stocks we look at today will have a little bit higher probability of working out if that buy-sell ratio is over 1. Now, this is also a measure of that breadth. There's more stocks participating, more stocks that are causing the move, and so that's something we'll keep a close eye on this week to see if that does bump up above there. Sentiment is still not in the extreme. We still have a room to go to get to that extreme, so there's still room for this market to rally before we have to worry about any sort of pullback. Another thing we can look at here, if we go under the index tab, and this is again just kind of keep an eye on those buy-sell ratios. This is breaking down the buy-sell ratios. Well, let me go back here. So the buy-sell ratio indicator here is looking at all the stocks that are basically in the system. There's like 8,000 stocks or something like that, and based on the buy-sell ratios, where are those at? And if you want to break it down into some of the other indexes, you can go to the index tab, and for instance, here's the Dow Industrials right here. It's currently at a 3-to-1 ratio, 3 buys for every 1 sell, which is a pretty good. That's moving in the right direction. If you remember, a lot of these were down at 1 or even below 1 just a little while ago. They're starting to move in the right direction. What would be extreme on these? Well, if you start to get close to double-digit ratios of 10-to-1 or 12-to-1 or higher, you might be starting to get in a little bit of an extreme range there where you could be close to getting maybe a little bit of a pullback. We're not there yet, as you can see, but again, the good thing is we're starting to see these move up to where they're in a more of a healthy trend, and there's more participation. There's more stocks participating. You can see right here at the Russell 2000, you've got a little over a 1-to-1 ratio there, 400 buys to 382 sells. If you see that start to really bump up, that's a pretty healthy indication that the trend is strong. So we'll keep an eye on that as well. Going into the individual stocks. So yesterday we had, like I said, we had that bearish reversal day. We opened stronger up here and ended up fading into the close. Usually when that happens, particularly early in the week, like on a Monday, it usually isn't good for the rest of the week. It usually means that things will tend to drop for the rest of the week. As you can see here, we've managed, although we were down a little bit early, we managed to rally up a little bit here. And now if this holds into the close, you can see how this is a little bit more choppy, more sideways. Now, I know these are real basic, but, I always joke that when I teach basic trend analysis, I talk about the stair step, I talk about the impulsive and corrective moves and the, choppy and impulsive type movement of the stocks. I tend to call that my kindergarten type analysis, meaning it seems very basic. I know some of you are very educated out there, and when you see some guy talking to you like it's like you're in kindergarten, I know it seems like it insults your intelligence, but it is the basics, and we all have the basics, and usually the basics are correct, and they're the best. If you can get these basics of impulsive and corrective down, and understand how trends move, they move in that kind of stair-step fashion, you're going to be right most of the time. You're going to be putting yourself getting yourself in the right direction of the rest of the market most of the time. And that's what we're trying to do as trend traders. We're not trying to overthink this. Believe me, if you want to outsmart the market and you want to maximize your intellectual skills, trend analysis is not for you. You want to go in and try to solve the great mathematical equation, but believe me, there's been smarter people than you that have tried it. You can't do it. There is no mathematical equation that will perfectly solve the markets forever, that you'll always be right. But if you want to pursue it, go for it. But if you want to make money, there's an old saying that says you can either be right or you can make money. And I love that saying because it's true. You can either try to find a way that you can brag to all your friends that you're right all the time, and maybe you're right some of the time, but you're right enough to where you can look like you're smart and you can tell everyone you're right, or you can just simply try to find out what is going on, what the move is, what the trend is. Don't worry about whether you're right or wrong on it, but try to get it right, and you'll make a lot of money. And I think that comes down to this as well. Just don't overthink it. And what we're seeing this kind of choppy sideways behavior. What I always tell you is whenever you see the market or stock moving sideways, you want to pay attention to the direction or trend it was moving in before it moves sideways, right before it moves sideways. And that's where it's more likely to go after it's done moving sideways. Now, the key words there are after it's done moving sideways, and that's where it's more likely to go. It doesn't mean it's guaranteed to continue to move in that direction. But if you look at most trend reversals, they tend to be more sharp. They tend to be stair stepping up and then they reverse back down. You get kind of that pointy reversal. It doesn't have to be completely pointy, but it tends to be a little bit more pointy. You usually don't see trend reversals that look like this, where you're moving sideways and then you start to drop all the way down. You will see them from time to time, but they're rare, and recognizing that they're rare is important here. So the more we kind of move sideways here, and I don't know how much longer we're going to move sideways, maybe we get a few more whipsawing days this week, but the more it's whipsawing back and forth, the more likely it is that it's going to end up moving higher. Now, having said that, that saying doesn't tell you that it's going to make a huge move higher. I mean, it doesn't have to come all the way up here is part of that move. It could just barely break out and then reverse, but it still would have moved higher out of that sideways range. So that's why I'm anticipating that that at some point we should break out of this range and move higher. Now, a couple of things that we'd want to be watching for, particularly the Russell 2000. But let's go to the Dow here because it's next on the list. You can see a very similar pattern here. Here's where it finally broke out from that. I always forget the date of that high. It was back in May. This May high right here. We finally broke out. I think that was last week. We barely broke out above there, and then we've just kind of been drifting sideways right here. But again, the previous move was up. We should end up breaking out higher at some point, possibly this week. Although again, it could still be whipsawing this week. But I would anticipate that we're going to break out higher sometime here pretty soon. The Qs, you're seeing a very similar pattern here. Recently broke to a new high back here. Since then, we've been kind of consolidating. It's looking like it should start to move higher. Now, real quickly before I look at the Russell, with yesterday's drop, there's still a chance that it could have dropped off of this. It had been moving a little bit sideways, but it's right in that kind of gray area. Like I said, sometimes it can move a little bit sideways before dropping. But it, like I said, with it reversing back up today, it still could drop a little bit as part of that sideways move. But I would assume that ultimately, I think we're still moving higher. That would be my analysis based on what we see so far. And then the Russell's still been underperforming the other indexes. You can see we're not near all-time highs. Here's your all-time high up here. We had this big drop, and this has been kind of chopping back and forth. It almost looks like it's correcting for another move down. And I think this is going to be key to the market going higher. Is we got to see the Russell 2000 participate. Now, this is also an area where I told you recently is a signal of where you'll start to see that market breadth. Because it's a wider index, it's looking at 2,000 stocks. If the index starts to move up greater than the other indexes, meaning that let's say the Dow is up 0.5% or the S&P is up 0.5% for the day, but the Russell 2000 is up 1.5%. That's a good sign that there's participation, that there's breadth, there's market breadth there. Anytime you have it when it's underperforming, you're going to have question marks, and that would be the big question mark right now. We're barely positive for the day, 0.02%. You look at the QQQ is up 0.5%. Dow is up 0.5%. S&P is up a little over 0.5%. So we're seeing a serious lag there in the Russell 2000 right now. So that's something to keep an eye on, though. When you're making your trade decision, again, you'd want to see in this context here. I would have wanted to see the Russell up 1% compared to the others up 0.5%. So although we are seeing breadth improve a little bit, we have seen a few days here especially on this rally last week, where the Russell outperformed the other indexes. We saw that breadth start to pick up a little bit. But like I said, today it's kind of faded a little bit. So it could be that we're still going to chop sideways for a few more days, and maybe we don't just take off right from here. So we'll probably get a little bit more clarification on this on Thursday of what ultimately is taking place, but it wouldn't be shocking if we're even down a little bit still on by Thursday, or still kind of moving sideways a little bit there, unless we see a change in there. And that can happen pretty quickly, where suddenly the market breaks out. So again, what I would look for then is, because those other indexes are close to breaking out again, let's see if we have an up day maybe tomorrow or Thursday, where the Russell is up a bigger percentage than the other indexes, and And if those if those other indexes are starting to break out, that'd be a pretty strong indication to trust that breakout if it looks like the Russell is participating there. If it continues to lag, that's a warning sign. That's a sign not to get too aggressive, not to fully trust the trend yet. And again, what decisions do you make based off of that? Well, the easiest one is to not trade, not do anything, just be patient, which is tough to do, I know, but you got to learn to do it. And the other would be to just tread lightly, to only get into a few trades, not overdo it. All right. Let's move on to bonds. Now, the bond trade has been kind of a little bit baffling to me lately because with all the inflationary numbers, it's kind of just shocking that those bond yields haven't been moving up as strong. But I think part of what's caused the bond market to rally still is that there's still been concern. We saw with some of the selling last week that there was a flight to bonds, even though there was really not much of a return there. There's still that kind of safety play that's in play there. But the key areas are still going to be this low and this high. And since the last update, we've just been bouncing around within that range. And so obviously the trend is still up, and it's still holding this support line of the uptrend. Remember, drew this in last week. We said if it breaks that trend line, and we were right on this area right here last week. I said if it breaks that trend line, that'd be an early warning signal that maybe things are starting to drop. Now, this is still going to be the key low right here that you'd want to drop below to get that confirmation that you're reversing that trend, that uptrend, that recent uptrend. But it's been holding that trend line. So it's the same thing this week. If it breaks that trend line, that could be a warning sign that it might be dropping. This is still going to be the key low right here to watch for, to really increase that probability that you're reversing trend or that you're moving into that downtrend. You can see that here too, that if we were to drop from here and break below this low, you'd have a lower high, and then at that point you'd have a lower low, and it would definitely be acting like a downtrend, at least early stages acting like a downtrend at that point. On the other hand, if it keeps holding that support line and moves up and breaks out above here, the uptrend is continuing. So again, the trend is still up, but we've identified the key areas that you would look for as possible trend reversal or when that trend could be in trouble. And so we'll keep an eye on that. If we move over to gold, gold really hasn't changed much. We've still kind of been in the sideways range. We've talked about this for the last few weeks. But these are going to be the key areas right here. Here's a breakout area here. If it breaks out above here, that would be more bullish for the trend, because if this is an impulsive move up and this is corrective, if we break out of that, should be back in that impulsive move up direction. If we break down below here, it would mean that we're possibly, this is just a correction within this larger downward move, and that we're heading lower. So again, with all that, let's draw a little bit straighter lines right here. These, you want to see it either break out above these highs or break down below these lows. And again, we're right in the middle right here. We're kind of in no man's land right now. So we don't have a strong direction out of that. And this is a little bit more impulsive down, but this is impulsive up. So with that kind of conflicting back and forth, like I said, there's not a real strong trend direction yet. I would call this as more of a sideways trend right now. All right, oil. Oil's also a little bit tough to read right now. The key that jumps out to me is this is impulsive down, this is impulsive up. Now, typically that's what you would see at a bottom, and it would be bullish. And last week, you remember I said that makes it a little bit more likely that this was wave A, wave B, wave C. This is kind of your ABC correction for oil. And this would be possibly that we're starting a new uptrend. I said what would help that is if this started to move a little bit more sideways, a little bit more choppy, more sideways, would give you a stronger indication that your oil is going higher. But the opposite has happened. We've had this impulsive move up, and then over the last couple of days, you've had kind of impulsive down. Now, we've seen a little bit of these sharper moves back and forth that can still create a high probability pattern. I mean, if you were calling this an ABC pattern right here, you know, even within that, you had a sharp move down, a sharp move up. There wasn't much chopping back and forth so much. We're getting kind of these sharper moves. Today has a little bit of a bullish reversal candle that's kind of lining up with this low over here. So there's a possibility that this could be an inverse or upside down head and shoulders pattern, which would be bullish. It would mean that this stock is, the oil is more likely to go higher. You've got this as the neckline, which is your major breakout area right there anyway. And that's what I would, based on this bullish candle today and where it's lining up and how things are looking, that would be my outlook, is that oil is still looking more bullish, still looking like it wants, acting like it wants to go higher. What would cause me to change that outlook? Well, we're right at, if this is an inverse head and shoulders pattern, we're right at where it would reverse. It would reverse right in this area right here. If it starts to dip down any lower than that, especially if it comes, you know, straight down, you know, if today it's trying to rally back up and tomorrow it comes down, has another big day down and breaks down this area here, well, it wouldn't tell me, it throw it right back into indecision. It could go either way at that point. And then you'd be looking at this low. If it takes out this low right here, you're clearly in a down trend, or clearly reversing into a downtrend at that point, or at least increasing the probability of it reversing into a downtrend at that point. So this is kind of a critical spot for oil. It doesn't hold this area here. Like I said, right now I'm more bullish on it just based on the context. I feel like it should, at the very least, start moving back up to this breakout area. Now, when we're forming left and right shoulders, it doesn't have to be immediate. It doesn't have to come right back up and break out. It could come up, come back down, and you could get a little bit more back and forth before it breaks out. But in the near term, with that bullish reversal candle, I would assume it's going to move at least back up to this area here, this breakout area here. If it doesn't, like I said, it breaks lower, then that would, I'd immediately reverse that expectation. And I wouldn't move bearish yet, I'd move neutral. It could go either way at that point, and I'd want to wait until it has a clearer direction. And that's the hardest part, especially if you're wanting to make a trade, and especially if you've heard somebody talk about energy stocks or oil stocks and they're bullish on it or they're bearish on it, and you're eager to try to profit from that that news you've heard. But it's important to recognize the trend behaviors. The trend behavior acting like there's a strong probability of it going in that direction, or is it neutral? And if it's neutral, why not wait another day or two? You know, sometimes we're so impatient, we're so afraid that we're not going to make our money, that we start guessing and we start hoping that we're right, or that we're getting in early. We're going to get the confirmation tomorrow, so I'm going to get in today, you know. And I bet if you look back at the times you've lost a lot of money, I bet most of the time it's when you've failed to wait for that a little bit additional confirmation that either would have confirmed what your analysis and you still would have profited from it, or it would have rejected your analysis and you would have saved yourself a lot of money by not guessing or jumping the gun, getting in before you got the confirmation. All right, the dollar. Now, we pointed out the key areas on the dollar recently. We said, obviously, it had broken out to a new high right here. We said if it breaks above that, it's confirming the uptrend. If it breaks below this low right here, it could signal a trend reversal. And sure enough, last week it broke below that low. Since then, it's been kind of moving sideways right here, but that confirms a downtrend, because remember, when you're stair stepping up, you'll get the sideways move right here. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's moved sideways. When you get a trend reversal, usually you get impulsive up, impulsive down. And then very often, to confirm that downward bias, it would be that when you get a sideways or choppy move, same thing. What was the trend direction before it started to move sideways? Well, it was down. That means it's more likely, not guaranteed, but more likely to move lower after that sideways move is complete. Well, we had kind of an impulsive up, had a little bit of an impulsive down that went to a lower low, and then we're moving sideways right here. So it's acting like a trend reversal right now. Now, that doesn't mean in the near term it couldn't try to rally up a little bit, because sometimes in these little stair steps, sometimes they can move up like that, kind of a bearish ABC pattern type look to it before going lower. And that can still look a little bit more choppy and sideways. You could get a little bit of a spike move up right here and then reverse back down and another impulsive move down. But overall, once this kind of sideways behavior is done, it should lead to another move lower. And if it does, it'd be probably even better if it tried to rally a little bit and then rolled over, because then if it dropped to a lower low at that point, you'd also have a lower high right there, a clear lower high that would be established. You still do right here, but a little bit of a lower high that's put in places. It's been moving a little bit more sideways, but that's what we're looking for. Is it now acting like a downtrend? And so far, it has some subtle signals that it's acting like a downtrend. The first being that break to a lower low for the first time in a while. The sharper move down, followed by the more sideways move that it's had in the last few days. These are all stronger signals that this thing could be dropping a little bit further. Now, it could be that this is just here's your uptrend, and this is wave A, you get wave B, and then you get wave C of a correction, then it eventually moves higher. This could be part of just a larger bullish correction that's taking place before it moves higher. That's definitely a possibility, but as far as the near term, analyzing the near term, I'd say there's still a little bit more downside. I would assume there's a little bit more downside probability there. The VIX did spike up a little bit yesterday, but overall, again, you've seen this decline right here, and you can notice that looks like it's starting to kind of round out and might be starting to move higher. We had the lower highs, lower lows, and then I pointed out recently when we had that market sell-off that we ended up having a higher low and a higher high. We still seem to be having a higher low right here. If that holds, now again, if the market continues to rally, that should drop back down and change that a little bit. But this is something to pay attention to. There's a little bit of a subtle shift going on with sentiment, it could be that these big hedge fund managers that are really controlling the movement of the VIX, or that causing the movement of the VIX, might be hedging a little bit, or they are hedging a little bit with the buying. They're still buying. They're also hedging a little bit in case there's a bigger correction there. But I don't see anything yet that's signaling that's really screaming that there's a large correction coming. I would assume that most of these little sell-offs will get bought until we start seeing these more extreme overbought conditions. We're not there yet. But if the market starts taking off right here, we could get there pretty quick, and you might start to see me say, "Hey, watch out here. This is an area where you would more likely get a bigger correction." A couple of other things to look at. We talked about comparing the semiconductor index, or the SMH, to the NASDAQ 100, the QQQ. NASDAQ 100, let me pull that up real quick again so we can see the QQQ hasn't broken out to new all-time high yet. It did recently, but then pulled back. But we are seeing that SMH it recently went to new high. So that would be a bullish divergence, meaning that remember, it was lagging. The chip sector was lagging back in here, and it's really come roaring back. Now, a big part of that run was AMD. AMD, if you've watched it since its earnings report, is just taken off. And if you compare AMD to some of the other chip stocks, some of the other chip stocks have lagged a little bit, although they're stronger today, but they've lagged a little bit recently. But AMD was really strong. So, but that's a good example of what we've been talking about a lot lately, which is that market breadth. A lot of this move has been from one or two chip stocks that have really taken off. You'd want to see all of them really taking off as the SMH is breaking higher. So it's a little deceiving, and that's something we'll keep an eye on. But we see it a lot across the market there where some of these moves the market has made have been deceiving because there's just been very few stocks that are causing those bigger moves, and there hasn't been that broad participation. But that is an early sign that if we can see the breadth pick up, there are some of these bullish signs that are starting to show up. SMH being one of them. However, another one that we look at is the Dow Transportation Index. You want to compare this to the Dow Industrials, the DIA. It's still underperforming. The Dow is very close to breaking out to a new all-time high. This last did an all-time high back in May. It's been lagging. And so that's a little bit of a warning sign that the transportation stocks aren't participating in the rally. But then I think this gets back to that market breadth as well. I think if we see that breadth pick up, you'll see the transports outperforming. But we'll point that out if we start to see it. So you can learn how to kind of use these indicators as part of your analysis. But the bottom line is it's telling you we're not in a real strong market right now. You wouldn't want to be overly aggressive with your buying in these conditions, at least not yet until we start to see a little bit more participation. One other thing I added here that we can start to keep an eye on as well is Bitcoin. I know, as far as Bitcoin is becoming more and more legitimate as far as big fund managers and big money players and banks and things like that. You're seeing it incorporated more in companies out there. Tesla has played around with accepting Bitcoin for payment for their cars, and they did it, and then they took it away, and they might go back to it again. But Bitcoin has been a driver of the market at times, meaning that the rest of the market has reacted a little bit with the movement of Bitcoin. Now, it's always funny because the market, once you think the market is moving based off of one thing, you think that's going to last forever. There are times where things will happen. Right now, how often do you hear on CNBC people talking about the Chinese markets, meaning the stock market in China or the stock market in Europe? You're not. You don't hear anything about it really for that matter. Everything's focused on what we're doing right now, because really what we're doing is driving everything else. But there are times where there are events overseas where the focus is on China or the focus is on Europe, and that affects how our markets trade. And I remember a few years ago it was Europe, and I would watch how the Europe markets were trading because I knew that was how we were going to trade. If they were down, we were going to be down. If they were up, we were going to be up. And there was a tendency, and this happened for a couple months, where all the focus was on Europe, and the markets were trading based on Europe. And if you at that time said, okay, I've figured this out, I've got a system now that I can make money with whatever's happening in Europe is going to happen in the U.S. What happened was if you thought that was what was always going to drive the market is what happened in Europe. Well, what happened over a few months is that pretty soon that event kind of faded away, and then the markets didn't care about what happened in Europe anymore. Or more specifically, Europe started then trade based on what happened in the U.S., which is usually what takes place. And I know that sounds kind of like the cocky American saying that, but when the U.S. market is the largest market, is the driving force in the world right now, and so most of the time the rest of the world is going to be watching what happens in the U.S. and reacting to that. But at times it will react to other areas in the world. But the point I'm trying to make is it tends to be temporary. And but we need to be aware of it. Bitcoin is not going to be the driving force of the market forever, but there are times where the movement of Bitcoin is causing movement in the rest of the markets. And it's really not right now for the most part, but it's something that you can kind of keep an eye on, because this could be an indication of there is a lot of millennials that are really involved in Bitcoin right now and are driving Bitcoin. And so sometimes you can tell how they're trading or what they're thinking as it relates to the rest of the markets. If they're really heavily getting into Bitcoin, it might be that they're buying other stocks as well. They're really buying. They're in a buying mode, and you can see some correlation there. Recently, Bitcoin hit a low, and if one of the there could be other ticker symbols. What I'm looking for here is just are there companies that are involved with Bitcoin that tend to might move a little bit with Bitcoin. On this service here, you might have to look at individual stocks, kind of like we'll look at the SMH which is the ETF for the semiconductors to kind of see how that group is moving. You might have to look at some individual stocks that are related to Bitcoin. This is Grayscale, which is it's a smaller company, but it's one that kind of tends to trade a little bit with. The chart looks very similar to the chart of Bitcoin, so we could use this as kind of a proxy to kind of see how Bitcoin is trading. But if we look at a little bit of a longer term chart here, let's go out a year. You can see that Bitcoin's had this big pullback right here, but then it's had this sharp rally that took it to a higher high right here. It had lower highs, lower lows. Shot up right here. It's pulled back a little bit, but it's pulled back a little bit more of a choppy pullback right here. So that looks a little bit corrective. It looks like there's potential there that Bitcoin could be reversing back into an uptrend. And so that's something to keep an eye on as well. That could be it could be a signal that some of that millennial crowd, or if you want to call it the Robinhood crowd or the Reddit crowd, some of those retail traders, might be becoming more active. This could be a little bit of a proxy or a signal of that. But we'll see. We can keep an eye on that. I just wanted to kind of introduce that as a little bit of something new that you could look at as far as your analysis to see if the markets are reacting to or moving in the same direction as Bitcoin or not. But you can kind of see that correlation there. That's one way, and you might have a better stock to follow that trades with Bitcoin. I just pulled this one out because I know that it has a little bit of that correlation. It tends to trade a little bit. The charts seem to look very similar to the movement of Bitcoin. All right. So let's get into some individual stocks here. And really the trading today is we're going to kind of continue to work on that portfolio. We're going to continue to build some stocks that we can put in our watch list and then hopefully move some of those to our portfolio. But we'll start with looking at the actually, let's start with the stocks. Let's go into specific stocks here first. Um, Under retail, one of the ones that we're still kind of waiting on here is Dillard's at the top, the 98 strength rank. DDS is a ticker symbol. Let me switch this to signals here. Now, it did dip down. It looks like it dipped a little bit to a sell signal here today from hold. But overall, remember I said I like this. Looks like an inverse head and shoulders pattern. And although we had an intraday low down here, it's come reversed back up. A little bit of a bullish reversal price action right there. And if this is a inverse head and shoulders pattern, this should start to move up off of that reversal today. But again, we're waiting for it to go back to a buy signal anyway. We already have this in our watch list, waiting for the email to trigger it, going from hold to buy, get to that buy signal there. But this is one that still looks good, and we're just waiting for that confirmation. Under computer and technology sector, I liked this MSTR MicroStrategy. It's a $620 stock, but 96 strength rank. But I liked the real kind of subtle possible reversal here. Again, obviously you drop down, lower highs, lower lows through here, but it's kind of bottomed out right here. You haven't broken above this high yet, but you have kind of a real subtle higher high. Well, actually it dipped to a lower low right here, but it's kind of consolidating. It looks, if you look at the lows seem to be kind of moving a little bit higher right here. I'd like to see it kind of break out above here to give it kind of a clear higher high off of this. But probably about that time it does that would push it to a buy signal anyway. And sometimes, again, these don't always work. Sometimes they look like they're turning the corner and then they falter, but that's why we wait for that confirmation. And that's why we manage our trades. We'll put in stops and things like that because they might not work. But obviously, you're going to have some of them that will, and when the ones that do should get you a big enough reward to offset what you're losing. And that's the whole idea with trading. That's what trading's all about, is making more when you're right than you lose when you're wrong. But you're going to lose. You're going to have losing trades. Just make sure you're making more money than you're losing. So this is one that we could go ahead and put in our watch list here. So we want this to tell us when this goes from hold to buy. So I'm going to click on this little green button right here. And we're going to, it's the watch list is under the stock specific class, which is the one we do on Thursdays. But since we're kind of doing it in both classes, we'll kind of add that up. We'll kind of keep all of it under that same watch list there. So let's go ahead and first we've got to add it to the watch list. So let's add it and then go to the watch list. And then we're going to put in the alert right here. I want it to alert me when it goes from hold to buy. So you check that box. Signal change from hold to buy. Yes, hit save. And it'll email me when that takes place. Now, I haven't received the email on the other two. We'll look at the other two here in just a second. Oh, we already looked at Dillard's. It's still a little ways away from giving us that buy signal there. So, all right, let's go back to sectors. Let's go under, come down here under construction. And go under the hold section right here. I'm going to look at right at the top of the list there, ASPN, 97 strength rank. There's a questionnaire, I think, about, I don't know what a lot of these companies do, and I don't really care. I care about the chart, so I think that question is related to Bitcoin. I don't know what Grayscale does. I know they're involved with Bitcoin as a way. I think it's a way that people can kind of do a proxy trade on Bitcoin. But as far as specifics of a lot of these companies, you can do your own Google searches on them if you want to know more about them. Really, what I care about is the chart and what the chart is telling me. That's usually just been my focus over the years. It's just a lot of that comes down to time, And to be honest with you, the other stuff to me doesn't really matter, because when I focus on charts, I'm assuming the chart is going to reflect everything that's known about the stock. All the information that people are using to buy and sell, their reasons to buy and sell, is going to be reflected in the chart, because the chart is just showing you the buying and the selling. Do I need to know why someone's buying it? No, because they're buying and it's going up. That's all I need to know as far as reading the chart. I don't need, and if it's going down, that's all I need to know, is that there's a reason they're selling. I don't even know the reason they're selling. That's what's happening. Sometimes when you get too caught up in other information besides the chart, it can conflict. Boy, this is a great company. The earnings are great. Well, why is the stock going down? This doesn't make any sense. Well, the markets don't always make sense, and there are plenty of stocks that are great companies that are trending down. There's plenty of crappy companies that are trending up. So if you get too focused on other information besides the chart, I'm not saying you can't analyze. I'm out of curiosity all the time, go and be curious what that company does, but you have to at some point decide what's going to be your overriding philosophy. And this is where technical traders and fundamental traders often get mixed up. Is you can be a technical trader, look at the chart, but also look at the fundamentals. But you have to at some point decide what's going to override the other. Meaning, if the fundamentals aren't backing up what's going on the chart, am I going to follow the chart or am I going to follow the fundamentals? You're going to have some, at some point you're going to have to override the other. And long ago, I decided I wasn't going to be too caught up with the fundamentals. Doesn't mean I won't look at them from time to time, but if it ever comes down to the chart and the fundamentals, I'm always going to go with the chart, just because that's where my expertise is in. But I don't know. I might have answered your question there, but anyway, here on ASPN right here, again, we just have basic higher highs, higher lows. It's kind of come out of this bull move right here, and it's moving higher. Recently had a higher high and a higher low right here. Has a little bit of a bullish reversal candle day. It is at a hold signal, but if that holds, and that tends to be, it's reversing kind of right at this previous high right here, which is a kind of an area of support. It would kind of confirm that uptrend. If it goes back to a buy, this thing could continue to move higher. So I'm going to throw this one in the list to let me know when it goes back to buy. And construction has been picking up quite a bit lately, the sector. So let's go ahead and add this to our watch list here. And then we'll put in the alert from hold to buy. All right, let's do a couple more here. Let's go into business services. And these are two stocks that are kind of related to Bitcoin, Mara and Riot, Marathon Digital and Riot. So I like these patterns. So they're 99 strength ranks. And let's look at it back out a little bit. You can see the bigger picture here. So we've had the bigger pullback, you had this big run up. You've retraced about 50% of that move. You had the big pullback right here. You had a move right here, and then you had a pretty big drop right here. So that concerns me a little bit, that we're just kind of moving sideways right through here. But what I wanted to focus on though is that rally off of this low is a higher low. This is a little bit of a sharper move up, and then this is really sideways. So this is, you have more of an impulsive move up, sideways move. Very early, but it could be a signal that you're reversing that trend. This is still going to be a key high to break above right here. But if this thing can go back to a buy signal, we could still look to enter a trade and maybe get a stop down in here somewhere or even a stop down below here to manage risk. But like that, that's if we went back to that other chart we were looking at that kind of mirrored the movement of Bitcoin a little bit better. That GBTC grayscale. But it looked like Bitcoin could be rallying up here a little bit here. So I like Mara, and you'll notice that Riot is basically the same chart. These move very similar together. Kind of the same, almost the exact same chart here. And it could be that because they're basically the same chart, why do I have to trade both? Could I just trade one of them? Yeah, you'd probably be okay with that. Now, it's still a little ways away from getting back to that buy signal here. So it would probably give us a little bit more confirmation if we started to see it kind of make an impulsive move up off of this and even start to break out above this high as it was going back to that buy signal. It'd be a pretty good bullish sign. But we need that confirmation still. So let's put both of these in our watch list. And put the alert on them. Let's do that with Mara to Marathon. All right, that's about as many emails as I want to get. I don't want to overwhelm my email account there. So we'll keep an eye on those. Like I said, Dillard's. If we look at this one real quick, as far as the chart, like I said, it might end up going to a sell signal after today if it doesn't rally up a little bit further. We're right on the borderline right there. And that's okay. We're still waiting for this thing to go back to that buy signal, get that confirmation. ZDGE was another one we have in here. It kind of went to that sell signal, but again, I'm looking at the larger context here, impulsive up. This is looking choppy. I wasn't too worried about this going to a sell. I'm waiting for it to go back to a buy as confirmation that this thing is taken off again. But that could take a little bit of time since it's still kind of in that sell area. It would need to get all the way over here to get to the buy. So this might be in there for a little while, which is fine. I knew that when I first put it in, but I'd like that. I'd like to catch that when it does go back to a buy signal, because that's one that looks like it could really take off again. And then let's look at our portfolio on the trades that I got into last Thursday. PFMT, again, it was starting to break out right here. It's just kind of moved a little bit sideways out right there. Today's looks like a pretty good day right here. It looks like it's getting close to breaking out. So that one still looks good, still looks fine. Our stop is all the way down here, I think. So we got plenty of room to let the thing kind of move. Again, clicking on my portfolio here. I'm keeping track of these. RM right here, Regional Management Corp. This has broken out. A nice breakout move today. That should hold into the close, and that's a really good sign right there. This thing doesn't have to take off immediately, but again, when you have kind of this cup with handle formation, when it breaks out, you can use the bottom of the bowl right here to the top of the bowl, take that distance, project it from the breakout area. It gives you kind of a minimum target. And again, it doesn't mean it's going to go there directly. It could take a little while, but the expectation is that this thing should continue to move higher. Right now, we're up about a whopping $246. Our starting point. We still have a lot of cash available, but we don't have any new position to get in, which is probably good. You know, we talked about the last couple of weeks that conditions haven't been great. We found a few potential patterns. We're just waiting till they get those buy signals. Those buy signals will probably trigger. They'll probably all trigger right around the same time if things start taking off. And that'll be good for us. So hopefully that continues to move in that direction. All right, that's all I have for today. We'll see you on Thursday for the stock-specific class. We'll have more of these that we'll go over, and hopefully we get some of these that trigger them. And hopefully we get conditions that are, where we a little bit more conducive to buying, and we can start to get into more positions at that time. All right, see everyone on Thursday. Bye now.